Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I've got the SP 500 up here on the screen. And this really has been an eventful week. S&P 500 down more than 2% on Tuesday. I also saw a news report. There was a headline, actually several headlines talking about Nvidia being down 9% on one of those days. One of the services went on to say that the $278 billion decline was the worst ever one-day market cap wipeout for a single stock. So on face value, it doesn't sound that good. But then again, the headlines often sound bad. That's just the way these things tend to go. What I'm interested in, what's the reality behind it all? What does all this mean? And I've got some charts to help put some perspective around what this week's price action has been all about. I'll also go through some of the possibilities to look out for over the next several weeks and then potentially into year end. So starting off with the S&P 500, as it stands, we have a strong rebound of the August panic low, and that's been followed by a pullback to the 50-day moving average. So this is not bearish price action. In fact, this V-shaped recovery that we have off the low, that's actually a sign of strong underlying buying interest. So that's not bearish. Strong underlying buying interest is not a bearish factor. We also have rising moving averages, as we can see, the rising 50 and 100-day moving averages, and price is currently above both of those averages. So this, by definition, is what a bull market is all about, when you have price above rising moving averages. Nothing here suggests that the trend has changed. What I want to do now, I want to focus in on this pullback to the 50-day moving average. So far, it has only come back to that 50-day average. I think this is a constructive piece of price action, and what it does, it allows the market to consolidate the rally we've had off last month's low. Big rally, strong rally, number of consecutive up days. These things need to consolidate. They just don't keep going up at that rapid rate. The pullback's allowing for that consolidation. If you were watching last week, you remember we were talking about the non-confirmation that there was between the Dow and the S&P 500. So they were both hitting new all-time highs. Well, the S&P 500 equal weight, I should say. The S&P 500 equal weight was hitting an all-time high, as was the Dow. But we're getting non-confirmation. The S&P 500 capitalization index, which is this chart we have on the screen, it hadn't made an all-time high. And the NASDAQ. So I just quickly show you what I mean. Here's the Dow, new all-time high in the Dow. And then you look at the NASDAQ, didn't confirm, didn't make a new all-time high. I said at the time that non-confirmation does not have to be bearish, but it can be a sign that upside may be limited in the near term, and that this could then mean more consolidation of these gains from earlier in the year. And I think that's what we're seeing now. I think we're seeing a larger consolidation play out. Now, coming back to the S&P 500, one of the possibilities is that the market tracks sideways along the moving averages, and this could play out for several weeks. So, for instance, let's just draw something in. We could see sideways price action where the market just chops back and forth for several weeks, but before then potentially starting a new push higher. Something like that is one of the possibilities. We could also see more of a zigzag develop, a zigzag decline that comes back to the 100-day moving average. All sorts of ways these things could play out, but they could all lead to a new platform that could then be something that becomes a springboard for higher levels going into the end of the year. Uh, as I say, many ways these things could go. I think the most significant price action is this rebound that we had off the low and the strength of that rebound. At the point of maximum fear, there just wasn't an appetite to take prices significantly lower. It all stopped after a few days, and we had that rebound. I think that's telling us that that the path of least resistance remains to the upside. For me, I think this is all about timing. I think the non-confirmation that I was showing you last week and then a little bit earlier today, I think that suggests to us that the market isn't ready to sustain an ongoing move into new all-time high territory. I think the odds favour further consolidation over at least the next few weeks. And also just remember, from that seasonality perspective, September's the weakest month on average. Not every September, but on average. And when you look at the stats, most of the weakness tends to cluster in the second half of the month. So look, it's just something to keep in back of mind. I think seasonality. Look, for me, it's more like a barometer. It's not a map. It's not something you can rely on. It's sometimes it can be helpful, but other times it's not. So you just keep these things in mind. But I think when we couple our seasonality barometer with the non-confirmation and the weakness we did see through the week, which starts to show that pullback potential starting to open up, I think it raises the odds that this week's consolidation has further to run. Now, I've got a couple of more quick charts to show you. Before I do that, if you're getting some value, please hit that like button. Please leave us your comment. Just, hey, thanks for the video. It just tells YouTube you're watching. YouTube shows other people. Helps me heaps. Please do that and click that subscribe button if you're new to the channel and you haven't already done so. Now, just to wrap up, a couple of important and interesting things. This is the percentage of S&P 500 stocks above their 20-day moving average. So we did look at this last week when it was hitting 90%. So 90% of stocks above their 20-day moving average this time last week. And that's the first time that had happened this year. Now, with that pullback, we've seen this come back quite a bit, back towards 50%. Got down about 54% earlier in the week, currently at 60. As you can see, this is quite cyclical. Runs from the upper end to the lower end quite often. Once it starts moving in the other direction, it tends to continue doing so for a while. I think there's still scope for this to pull back to 50% and possibly below. I think this plays into that consolidation scenario, but that's not bearish. That's just talking about consolidation. I think looking at when we look at S&P 500 stocks above their 100-day moving average, I think this tells us the bull market remains intact. Currently about 2/3 of stocks remain above their 100-day moving average. This is telling me the rally's broad-based. There's nothing here suggesting a trend change. I think it's still a case of staying long stocks, using wide trailing stops to try and see off pullbacks. And I think the current consolidation, I think we should use this to look for setups for buying opportunities. I'm interested in stocks that are consolidating along their moving averages and then starting to break higher. I think that's where the opportunities lie. So look, let's call that a wrap for this week. Hopefully that's been interesting. Thanks for joining me. I look forward to coming back. We'll do it all again next week. Till then, bye for now.